for our YouTube listeners and viewers. And we'll click live here for our Facebook visitors as well as we talk with Aaron Doan from Aaron Doan State Farm Insurance over the next few minutes. And talking about family life insurance. Is life insurance, Aaron, one of those things that people do get confused about a little bit, or is it a pretty much a cut and dry sort of program?
No, I think majority by far get confused on, what they should have and what they should do, what kinds there are. And, we do our best just to make it as simple as possible and understandable, and really try to ask really good questions to fit the needs of, where they at, what's going on, and try to help them. I mean, the big questions that they get into is, first of all, is why do I need it at all? I have some at work. Mm-hmm. And so we kind of explain that most people have 1 or 2 times income for their benefit at work from their group life insurance. And that's if you work for a big company. So half the people that work in our smaller counties that are listening don't have life insurance from work. So, and those that do, if you have 2 times income, that lasts for 2 years. And what happens after 2 years?
Yeah, and for all of us that are thinking about this, is that from a life insurance standpoint, we're sort of thinking, okay, later in life we add life insurance, that'll cover us. But there's got to be, and I don't know if you know this. I mean, it's a difficult question for me, but is there an age? I don't know how to explain it. I'll just say it this way, and you tell me if I'm really confused.
Yeah, for sure, go for it.
Is there an age where it's too late? Do you know what I mean? Too late to get to get life insurance in general, and it's never too early, right? I mean, because some people will think, well, I'm not thinking about that right now. That's later in life. Can you answer that kind of both part of that question, if you don't mind?
Yeah, so State Farm goes from 15 days old.
Okay,
15 days. We got to wait. Baby's born. Mm-hmm. Want to get life insurance on our baby or our grandbaby. Okay. 15 days. Okay, on the other end, age 80.
Okay, 80 is a cutoff.
And it's amazing the number of people that are continuing to do things, Chris, where they're maybe creating some additional debt, or which could be a business or a building or a new house or a bigger house for grandkids and things they want to do, a dream house for retirement. I'm amazed at the number of people in their 60s and 70s that really still need life insurance, larger than just for the funeral.
Okay.
It's amazing right now. It's a total shift over the past 10 years where more and more people are surprised that they need life insurance again, more than just what'll pay for their final expenses.
I'm always curious about this, and we're going to dive into the overall idea of the family life insurance this morning. As you're just joining us, Aaron Doan from Aaron Doan State Farm Insurance. When people take out life insurance policies that are multi-million-dollar policies, we always see the billboards and stuff is like, okay, your funeral, $6,000 or less funerals, so and so forth. The millions of dollar policies that are taken out, I would assume that's for the family to continue, but it almost seems like you can, and I hope this doesn't sound horrible.
No, be overinsured probably, right?
Well, I mean, you're if you pass away, your family gets millions and millions of dollars, but over the course of your life, I think the average American makes about $1.5 million. Does that make sense? That it's like, okay, now we have a surge late in life because of passing away.
Yeah, I think that number's actually a little larger now, Chris. It's actually probably somewhere between 2 and 3 million.
Okay.
So we actually have a bar chart that an exercise that we put people through. It only takes about 2 minutes, but we find out about their assets and about their debts, and what each thing's worth. So most people would be listening and going, oh, by far my biggest asset is my home. And we ask them, well, what do you make per year, and how long will you make that from this point, perhaps until you quit working, retire. And so oftentimes that number can be $1 to $2 to $2.5 to even $3 million for replacing their income. So not everyone does that. Now, in our community, we definitely have people that make six figures and people we talk to, but the average worker around here makes 35, 40 grand. And so what we're looking at is, okay, how long is it going to be until the mortgage is paid for? How many years is that? And also compare that to the kids. Like, when do the kids get out of high school or college? And so when we're talking about these millions of dollars of policies, to be quite frank, 99.9% of our policies are $2 million or less.
Okay.
So we're not talking that we write out of our office, which, by the way, we write about 80 to 100 life policies a year. So that's how many we write for new policies. So when you have that many on the books and 99.9% of them are under $2 million, that tells you kind of where the market is and incomes and what we're trying to help people replace.
When somebody passes away and they have a life insurance policy like that, is it an annual payout? How does that work when it comes to the family?
Yeah, again, another 99.9% of the people take a lump sum and they reinvest that money to live on.
Okay.
So what happens if you don't have life insurance is, what are you going to live on when the bills start coming in after you're working through this a month or two down the road? And you have to make some really hard choices, and I call it sometimes a fire sale. Yes, we have assets. We have toys. We have tools. Whether that's a camper or a quad or RV or a third car, you're going to start to sell them. And if you need the cash, you might sell them for less than what they're worth. And so the power of the life insurance takes that into account as well. So we're looking at, let's not have a fire sale. Let's not have you go into a smaller home. Let's not have you to move in with relatives, and life insurance, especially when the need is bigger, we're oftentimes looking at term and maybe some permanent. So when we're talking about this family life plan, it is really it is term. And so we're trying to replace, make sure you can stay in your home and make sure you have income to help you, with the kids growing up. And I do hear, and we hear, well, I'll just remarry. I'll just, somebody else will help me with the expenses. That's true, but you kind of need to look at it from a worst case scenario standpoint. What if you don't find that significant other and you're a single parent trying to raise the kids? Having this backup plan, no matter if you work part-time or full-time, you're the breadwinner or not, just having that cash to be able to continue on your life and to focus on your kids, be able to still take them to those activities and still stay in those sports and band and things you want them to do, you got to have cash to do that.
Absolutely.
And so that's where this is so important.
Well, let's talk about this in depth when and I'm glad you kind of built that foundation, because we tend to focus on the single individual in our family, in our household, that will carry the weight of the rest of the family when that person passes away. But ultimately, we wanted to be talking about family life insurance. And you had mentioned a few moments ago about covering the kids starting at 15 months. Is that correct?
15 days.
15 days.
Yeah, so they can be covered if they're 15 days old. So sometimes we'll do individual policies for the kids. They've got it covered. You don't have to worry about health conditions. The odds are minimal, but we all know children that have had some serious illnesses in our communities. And let's get that taken care of, take it off the table. So there's times where we'll do it on a family plan, or we'll do the children individually with their own policy, separate number, if you will, policy number. So it just depends on the family and the desire of the family.
And when we're talking about policies, when it comes to life insurance, I think I was looking at something with State Farm that is just over $300 a year, right, for some of these policies. Is that correct?
They can be, yeah, for sure. If you're in good health, a lot of times when we're looking at family plans, we're talking to families that are in their upper 20s or 30s, and sometimes early 40s, when we're kind of looking at a big plan to start. And they're what they call a term policy, which means a term of time. So they can be a 10 or a 20 or a 30-year term of time, Chris. So what we're looking at is, a lot of times, if, let's say, a couple is 30 years old and they've got, 2 kids, we're looking at oftentimes a 30-year term policy to get them to at least, 60 years old. So that term premium stays the exact same amount level, and it can be for the whole family, maybe with 2 of them included, could be in the $500 a year range, including the kids. So at that age, if you're in good health, health. And so, it is based on your health. You have to be eligible, and the better health you are, the better the premium.
I see that, in this particular case, State Farm just breaks it down for you. You'd mentioned in the 30s, select term 20 best rate was like $232.50 a month, or a year for the male. Female is about $115, and I remember us talking about this. Is that women tend to have better rates when it comes to insurance because us guys tend to be a little bit more dangerous.
A little more dangerous, and we just don't live as long.
Yeah, exactly.
I know, it's just one of those things.
It's a horrible factor.
All the guys listening are like, yeah, that's true.
Yeah, that is.
Yeah.
And then the child for an annual about $50, so comes into about $397.50 per year. Do you see that people they say, well, $400 a year? That's not too bad for
a whole family.
For a whole family, yeah.
Yeah, I think people don't realize it. And I'm sure most of the listeners are like, wait, what? $400? That's it? Yeah, I mean, it depends on the need, and my guess, I didn't look at that specific stat you're looking at, Chris, but I'm guessing that's what $250,000.
Yeah, it says here's an example. Yeah, family life insurance would cost a family of 3, assuming $250,000 in coverage.
Yeah, okay, $250
for each.
Yeah. So I think the $250 is a decent number, but I mean, let's just face it, that's not 10 years of income replacement. So I find that a lot of people want to look, maybe more at $500,000.
Okay.
It just depends on, again, their income and their situation and how much debt they have. But $250,000 is, we don't want to downplay this, but something is better than nothing. I can tell you that when I've handed out these 6-figure checks to people, they always would say, in some way, not always verbally, but you could kind of tell by their language that they wish it was a little bit more. And we're not talking a lot more, but I have handed out a $250,000, a $300,000 check before, and I think those two situations both would have liked those to be about $500,000.
Okay.
And so I think again, depending on what you make and your budget, it's so individualized. We're trying to figure out what your family can afford and your budget, but having something is much, much better than having nothing.
Oh, for sure. Let's talk about, and if you're just joining us, we're talking with Aaron Doan from Aaron Doan State Farm Insurance. Select term riders and children's term riders. When we talk about that, what kind of conversation are we having with you?
Yeah, so I think that part of it is what is this actual policy, and where does the select part come of it? Well, it's a part of how the life insurance companies look at who are we underwriting, and we're being selective on who we're taking in terms of the risk. So it's select in that if you get chosen, 70% of the rates are what they call standard rates. So that means non-tobacco standard. 70% of all policies issued are in that price point. So if your health isn't quite as good, and it's not, you can still get life insurance up until you're not eligible because of a serious health condition.
Okay.
So you could pay more, and you could pay less. We have what's called preferred, super preferred, and elite preferred rates. Fancy names, just saying, if you really are in great health, you're going to pay less than what we even quote. Okay. Underwriters are going to look at that, so they're being selective and kind of looking at your medical history, in terms of what's in your medical records, all your stats that come from a paramed exam, and so that's not too difficult. You can do that in your own home, do the paramed exam, and so there is a urine and blood profile that they do as well. When you get above $100,000, the life insurance company is going to pay that money to take care of those labs and to the paramed. So you do have to do a life insurance med. It can't just be a regular doctor's physical. Okay. It has to do, the life insurance company is going to pay for this to be done to look at the numbers themselves.
Well, because it's money that they're paying out or not having to pay out. But, and we talk about, and just on a side note, different states having different issues. I was reading about insurance companies moving out of California, as an example, or not offering a lot of insurance there, partly because of higher costs.
Risk.
Yeah, exactly. Yeah.
Yeah, and to be able to carry the rate for the risk. See, I mean, it is a business, and so I think we just need to realize that the business, like other businesses, to make money, but at the same time, it's to provide a service and provide it as a, if you will, a good neighbor, and really, it's to provide it to give a promise. And I think State Farm does a great job at providing the promises. I mean, now after 21 years of being a State Farm agent, I mean, we literally hand out about 3 to 4 life checks. A lot of them are smaller, to the elderly, but every month.
Okay.
So I have 800 life policies on my books. So 800 people in our community have State Farm life insurance just with my agency.
Oh, wow.
And so they own those policies, whether it's term or whole life or universal life. They own it. They control it. It doesn't matter what the employer does. By providing the benefit or not, they control their own destiny of having their own life insurance. And a lot of young families pick the family life insurance, which insures the breadwinner, it insures the spouse, and it insures the children all on one policy.
Good information there. We had a message come in regards to this topic. It says, so took out a 30-year policy at the age of 47, and now 8 years in, still in great health and no issues. Should I look to update to a new 30-year or run that one out?
Yeah, it really depends on what that rate is. And so let's say you've even improved your health for whatever reason, or perhaps if you were a tobacco user and you literally stopped using tobacco for a year or more, you can get re-rated without having to run the underwriting of that policy, meaning having the company look at all the health information and stats with doing a new application. So if you're in great health and you've changed your health, I would say if it's probably more of an improvement of your health, then for sure I would look at it. But if you've got a 30-year term that's affordable that you got at age 47, I mean, that's going to take you through even choices you may make in the next 10 or 15, 20 years of buying things that you might have a little bit of debt with. I mean, for me, I got my classic example. I built a house on Hackert Lake here in Scottville. I bought a building on US 10. If you would have told me that at age 52 I was going to do those things and have a little bit of debt on both of those, I'd have said, you're crazy. Why would I ever do that at 52 and I'm about to have my house paid for? So I am a classic example, and I'm seeing this very consistently. So those that are in their 50s, 60s, and 70s, if we don't know, we're living longer and making choices, and we want to be actively engaged in doing things, which creates buying things, or active in businesses or investment properties. If that's a potential, even outside potential for you, land that term, and sometimes a little bit of permanent life insurance so that when your term expires, you still have coverage. So there's a lot of people that will take some of their family life plan that's term, and they will convert some of it to permanent. So when they actually do pass away, it provides cash for the spouse or for the kids, to pay for the final expenses, to reimburse them if they've had to take them to the doctor often. And even here's another thing. 2008, 9, and 10, we had a lot of people that could not sell mom and dad's home in that year. When we were in the mortgage crisis, if they were going to sell it, they were going to sell it for 30, 40, 50% less than what it was worth. If your parents had life insurance, you could actually pay for the maintenance and taxes and insurance for a while and not have to worry about selling mom and dad's house for 30, 40% discount.
That's a good point.
It's a huge point that a lot of people are dealing with now, because 60-year-olds, really, they're the ones getting these policies for their 90-year-old parents who are just passing away, and mom and dad's house haven't been updated for 20, 25 years.
If you're just joining us, we're talking with Aaron Doan from Aaron Doan State Farm Insurance. Just a couple more questions that I have. Is there a point where do you have to have that life insurance for a certain amount of time? I mean, we see all these movies, right, and TV shows. I took that policy out, and then the person mysteriously died, right? In these mysteries and movies and so on and so forth. Is that like real life? Like somebody can take a policy out and and then it's 6 months later they can collect on that policy. How does that work?
Yeah, so there is a, if you will, a look back period of a couple
Your criminal record.
Well, I haven't seen it in my career, but I know it does exist, and it is on the policy contract, which it is on most companies. In fact, I would argue to say all life insurance companies' policies, is they have a 2-year contestability.
Okay.
So they can actually look, and if there's something that was really unusual or strange about the death, especially from a medical standpoint, that there's no way that they didn't have this before they passed, the company could look at it. Now, I haven't had that situation in 21 years. Okay. Again, remember, we're handing out 3 to 4 life checks every month. An average of about 25 to 30 a year, I guess I should say. So I mean, in the movies, that happens, but not in real life. The other one is a harder one to say out loud, but there is a 1-year suicide clause as well, which, again, that's a really sad situation. But you can't be wanting to hurt yourself. I mean, and collect on life insurance. That's you can't do that.
No, absolutely not. This is it's good questions to ask, though, I hope, and it's interesting to know because again, we have that sort of stigma or thought process that is it's always later in life. It's one policy covering the rest of the family, but you've addressed a lot of those issues today. And I think the only last question I have is when that transition from high school to college. We look at a lot of high schools getting out right now, and let's say that you have taken out that life insurance, that family life insurance policy. Is there any changes that you want to do or are recommending when that transition into that teenager to adult?
Yeah, I think it can be in that window of time for college if there's going to be college debt. I think a lot of parents, depends on what kind of loan you're getting. If it's a private loan for college, so students can listen to this too, but parents of, high schoolers that are going into college or getting ready for that space is, if they have a $25,000 or $30,000 debt per year, and it's private loans for most of that, the life insurance is often done on a 20, 21, 22-year-old just to cover that debt, that's going to be owed by the parents. So it would add serious injury to illness and death by not having that debt covered. In other words, if you're the mom or dad, imagine having to pay that college loan, private college loan for the next 20 years for your student that you co-signed with. Yeah, that's a serious, that's a big transition right there, Chris.
All right,
sure.
Good information here. Anything that we missed talking about before we finalize our wrap here?
Well, I think just to understand for the listeners that we really do not try to pigeonhole you into any type of policy. We look at it individually. We try to look at short-term and long-term and just try to fit your budget. So life insurance is way more affordable than what people think. And so just give us an opportunity. I'm the State Farm agent that's out on the highway on US 10, half a mile east of Meyer. I've actually a 5th full-time person starting on Friday.
Okay.
Nathan Brown. We're excited to have him. And he is actually going to be our life and health specialist.
Awesome.
I've never had a person just to do life and health. So we're excited about having that young man start on Friday. Congratulations, Nate, man. He's taken the exam today, but he's been scoring in the 90s getting ready for it.
That's great.
Yeah, we'd love to help you on your life insurance need for sure.
All right. Right there between Ludington and Scottville, north side of the road. Aaron Doan from Aaron Doan State Farm Insurance. We appreciate you coming in as always. And thanks for just kind of giving us that some good recommendations and clearing up some of those questions. And we appreciate you always doing that.
Thanks, Chris.